Bluestone makes investment loans simple with competitive interest rates. Borrow up to 85% of the value of your investment property without paying lender's mortgage insurance, and no cap on existing investment portfolio size. Plus, personal Bluestone support from application to settlement. So don't wait to unlock your future. Bluestone, award-winning home loan solutions. Find out more at bluestone.com.au/investors. Lending criteria, T's and C's and fees apply. Credit provided by Permanent Custodians Limited, Australian Credit Licence 390183.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Oh, g'day, how you going? Phil Tarrant, host of the Smart Property Investment Show. Welcome, thanks for joining us. And today I want to go behind the headlines, what's making news on smartpropertyinvestment.com.au. I've asked a couple of people in the studio who can pretty much cover a lot of ground. Steve Waters, Victor Kumar, these guys are directors at the Right Property Group. They're here. We're going to break down some of the stories leading the charge on smartpropertyinvestment.com.au, which is absolutely off the charts at the moment. With property so hot, traffic to the site is just exploding. So our team is delivering some great work. Big shout out to Maya, Cameron and Fergus. Keep up the great work, guys. Plenty of stories around stuff that you need to know as a property investor. And remember, just as a reminder, it's out, it's there, it's ready. You've been asking for it for years. We've now made it available. The spreadsheet that we use here at Smart Property Investment to manage our own portfolio is available for you for download. This is a great initiative, and already there's people right across Australia getting access to this sheet. So this is the tool that I use to make sure I'm running our portfolio effectively. It looks at it from a debt level, a yield level, a P&L level, and also a balance sheet level. So go and check it out. It's the Smart Property Investment Portfolio Spreadsheet. All you need to do is go to smartpropertyinvestment.com.au. You see on the homepage, it's a big thing that says download the Smart Property sheet. We've done this in conjunction with our friends over at Atlas Property Group. All you need to do is click on that button and you can download the spreadsheet there. Any questions at all around it, you're more than welcome to get in touch with us here at Smart Property Investment. You can email editor@smartpropertyinvestment.com.au. It's all in there. It's all pretty self-explanatory. There's some example properties there. So all you need to do is fill in your numbers and you'll start getting a real-world picture on your portfolio. I hope you enjoy it. Remember, smartpropertyinvestment.com.au. Let's kick it off. And I'm going to put this one to you, Vic. We speak a lot about portfolio makeup and lender diversification. There's a story here why you may need to consider a non-bank lender. A lot of people think that if you need a non-bank lender, it means that there's something wrong with you and you can't get a normal bank loan. That is such fallacy.
It is. Yeah. So if you look at the big four, they get the lion's share of lending. And therefore, if you're looking at a second or third tier lender, they need to tweak their product to get a different offering. And sometimes it's as simple as they have a more aggressive calculator in terms of how much money they can lend you, how they're treating your income, such as overtime, such as, the rent shading that they're doing in terms of how much rent they're taking off the gross rent to look at the figures. So these would then allow you to have the ability to buy the money or buy the debt to be able to buy the property. And
this story here on smartpropertyinvestment.com.au was written off a podcast I did with a gentleman called Luke Fan. He's the head of product at Bluestone Home Loans, which is a non-bank lender. And he told me that they don't use a credit scoring mechanism in order to approve a loan. They look at the loan very differently, and that can be a huge enabler for investors.
Absolutely, right? and particularly lenders like this, they may be actually manually assessing your application as opposed to, say, the big four where it's an automated assessment. So if you don't tick all the boxes, you don't qualify, and you need to then perhaps through your broker, escalate the loan application. And some lenders actually will not allow you to escalate the loan application. It's either done automatically or it's not done at all, whereas lenders like this would be a lot more flexible.
So should you be asking your broker, Vic, hey, why don't you consider some non-bank lenders?
The standard approach that under the responsible lending with the brokers is that they need to look at the best case scenario as to what fits to your lending criteria and what you're trying to achieve. So naturally, a good broker will always look at those things first to say where is the money best placed based on your circumstances.
And circumstances might be, and it's an interesting point that some of these non-bank lenders, like Bluestone, for example, which is the base of this story, they can give you approval in 48 hours. But if you went through a mainstream bank lender, it can take a long time. So would that be from a responsible lending point of view? would that be something that a broker can put in front of you saying, okay, you need this finance done immediately. Here are the only 2 or 3 lenders who can turn this stuff around in 48 hours?
Indeed, yeah. They need to look at it from an individual borrower's circumstances as opposed to, going down the cheapest rate or the brand name or anything like that. You need to be looking at it from a viewpoint of how quickly can I get the money based on your circumstances as well. Okay,
and that's a key point over and above interest rate. But Steve, we've all seen a lot of these stories coming out across the media. 4 Aussie cities, this is on smartpropertyinvestment.com.au, we covered as well, 4 Aussie cities among the 10 most livable in the world. That all sounds really nice. I don't think Sydney was on the list, by the way. I think it was Brizzy, Adelaide. I think Melbourne was in there and maybe Hobart. I can't remember exactly. But anyway, Sydney wasn't right. But it all sounds really nice that we've got some of the most livable cities in the world here in Australia. What does it mean for property investors? Does it matter?
No. I think it's a great title. But at the end of the day, especially for the medium term, there's going to be no significant upside or downside depending on where you are on the most livable cities in the world. It surprises me though that some of the states or the cities actually made the list, considering that it just goes to show you how tough it is elsewhere to make the list.
4 out of 10 is pretty good. So Adelaide was 3rd place, Perth, Melbourne and Brizzy, they ranked 6th, 8th and 10th. And Sydney was just outside, mate.
Well, that's based
on
11th. Yeah, it's based on certain metrics and on the say-so of someone. And I'd gather if you ask someone different, they'd have a different opinion as well. Should you be making investment decisions or purchasing decisions based on where you sit in that list or the city that you want to purchase in sits on that list? Absolutely not.
So you're saying a story like this is largely redundant for property investors. It doesn't really matter that much. Who cares?
Yes, basically. Yeah.
That's a bit harsh, isn't it?
Well, it is. But if I'm going to make my investment decisions based on a media article by someone who I've never heard of,
like Smart Property Investment.
I'm talking about the person that made the list, not Smart Property Investment, Australia's premier media agency. Well, that's I'm not at a sophisticated level that potentially I'll have millions of dollars on the line.
And hence the reason why we'll talk about stuff like this on smartpropertyinvestment.com.au. Property is a popular theme for most media outlets because most Australians hold the majority of their wealth in property to some degree if they are a homeowner or a property investor. And you need to think back to, we spoke about at length on this particular podcast, the start of the COVID pandemic when property was going to reduce in value by 30%. We didn't say, well, that's not going to be the case. Hold on. But every single media outlet in land was running that, right?
Correct.
And you only need, what's his name, Martin North to come out again saying, yes, as I told you it was going to drop 40%. I've been telling you that for 10 years, right? The media loves that sort of stuff.
Well, they do. And I think, even though this heading is not a negative heading.
Well, it's a good thing for Australia.
It's a great thing for Australia, and maybe that will somewhat help with
to stimulate migration and all
the numbers.
Sort of
that's why I said in the medium future, but in the long-term future, it may have some sort of effect. But you've got to survive that time between now and then, not on the say-so that, you're going to get 6 million people move to Adelaide.
Okay. We're going to go a quick break. Stay with us. When we come back, a suburb in southwest Sydney, which is going to be a success story, allegedly. Back in a moment.
Whether you're a seasoned property investor or about to buy your first property, finding the right investment property to buy in 2021 isn't easy. Why do it alone when you could partner with award-winning buyer's agent Paul Glossop? Over the last 10 years, Paul has helped hundreds of clients build multi-property portfolios. Paul's secret is finding off-market bargains that get snapped up before the general public even gets a sniff. Interested? Head to purepropertyinvestment.com today to schedule a strategy call with Paul Glossop.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show. I'm with Steve Waters and Victor Kumar from the Right Property Group, going behind the headlines of smartpropertyinvestment.com.au. Now, Victor, I didn't even know this place existed, and I thought I knew Sydney pretty well. A headline here, Menangle Park could be the next southwestern Sydney success story. And I'll read this out here. The past 12 months has seen new estates in the southwestern suburbs of Sydney, such as Oran Park and Wilton, explode when it comes to the value and buyer interest. What do you reckon about these areas? These are sort of greenfield sites with a whole bunch of house and land type stuff, right?
There is, generally. You still get a lot of investment opportunities in those areas. Now, it's still very early days in these suburbs because there's a lot of vacant land around there that's being rezoned and redeveloped is part of the infrastructure plan for the Badgerys Creek Airport. So it gets into that catchment area. And when you really look at it, that's probably just one of the few corridors in Sydney where you can actually still develop at this stage and still be within reasonable travel time to Sydney CBD itself.
So this is located 10 minutes from Macarthur Square, 90 minutes from Sydney CBD. It's Menangle? Menangle Park is a master planned community of over 4,000 homes.
Correct.
Right? It's a lot of homes. You know the Campbelltown, Macarthur area better than most. You're still quite bullish on that whole sort of region?
Quite bullish on that, but we also don't want to be caught up in the buoyancy of the market unnecessarily, because if you buy the wrong types of properties, you'd be stuck in there for a little while as the prices move up. But it's not unusual in these areas now to see $1 million plus purchases.
Yeah, and you see it down in the southwestern corridors through there. You're seeing in the northwestern corridors now as well. That sort of land out towards Windsor, Richmond, sort of northwest from there. There's a lot of infill there as well, Steve, right? You're going to see these stories moving forward, new suburbs created.
I think you'll always see them until we run out of land. And the Sydney Basin is one of, if not the only large city in Australia that is geographically constrained, as we've talked about before.
Yeah.
But there is a limited amount of land within the Sydney Basin, as the cliche goes. However, there's also, it's all good to build something, but there needs to be that infrastructure component there. There needs to be jobs. Whether someone who lives in Menangle Park on a house and land package travels to Sydney CBD daily, maybe not, but maybe the trend is now, because of COVID, that we'll start to see those employment nodes further out.
What's the infill like across the new south, west rail link? Is that sort of filling in? Because there was a whole bunch of unit developments of those sort of master plan little, what do you call them, community areas like Rouse Hill and that sort of stuff.
I've always been opposed to them. I just think they're out of place today and for the medium term. Who knows what the long term is? I just think it was bad design, poor design, and I'm sorry if anyone's bought those that are listening. There's a lot of apartments.
There's
a hell of a lot of
building
apartments,
them, right?
yeah. But interestingly enough, though, because of COVID, clearly, anything with a bit of land component has done extremely well out of that, as well as the government incentives, the low cost of money, et cetera, et cetera, et cetera.
Yeah.
But there's also some other pretty big infrastructure progress happening or just been announced. I think it was late last week. There's another major bridge construction for the Hawkesbury region up into North Richmond and so on.
Oh, really? I didn't know that.
Yeah, which makes a big difference. However, there's, as there always is, it's open for communication with the local councils. But that type, when they've got thousands of house and land packages go in there, it's a matter of the infrastructure is very necessary.
Flood prone through Windsor and Richmond,
it is, but I think it's more for traffic movement, and it needs to be.
That new bridge they put across the P in there flooded the last floods, right?
Yeah, that was the one that I was caught on. It was, but that was, let's be real, that's a pretty big flood, pretty big event.
Yeah. Okay. Now, you always see these numbers coming out in any market, Steve. There's a good story here, smartpropertyinvestment.com.au. Housing activity shifts towards investors. A major rebalancing in housing activity towards investors and away from owner-occupiers is currently taking place. New data has revealed Westpac's latest sentiment surveys pointed to a clear shift in housing activity towards investors and away from owner-occupiers as the time to buy dwelling index clocked its fifth monthly decline in a row to outright pessimistic territory for the first time since April last year. It's all very interesting.
No, I wouldn't read too much into that. I think what is true, though, is that we've certainly on the ground, we've seen a shift away from the first homeowners activity. But it's not because they don't want to.
Yeah.
It's because they're
priced out.
They're priced out.
It says, according to the Big Four Bang, surging prices and rapidly deteriorating affordability are clearly starting to weigh heavily on buyers, suggesting owner-occupier activity, particularly first-time buyers, is likely to fade.
Well, and that's exactly what's happened. In combination, potentially a few months ago now, probably 3 months ago, where not just first homeowners, but homeowners were sick to death of being flogged at auctions or going to an open house with 300 other people and being priced out immediately. It weighed heavily just on the mindset. So they started to retreat from the market, and maybe they rent vested as an example. Who knows? Yeah. But they certainly have been priced out. In combination, I think, with the government grants, just winding back slightly.
Yep.
And the one thing that not a lot of people are talking about, but I wonder if it'll have an effect over the next 6 months, and that is construction and just materials, or the lack thereof of materials. If you're a first homeowner buying a house and land package, or anyone for that matter, and there's
a huge undersupply.
Huge undersupply.
So you might buy a house land package, but actually getting the house on the land might take some time.
It'll take a massive amount of time. In fact, this is a big assumption, but I'm going to guess new financial year just around the corner, we're going to see an explosion in the cost to construct. And that's if you can get the materials.
And would that sort of make you hesitant, Victor? And I know you guys don't normally operate in that place, but these house and land for investors like dual key, turnkey, whatever they are, where you get a granny flat and whatever, like you're just not going to get your house built.
No, you won't. Or the cost will escalate. And this is where a lot of people don't understand that even if you've got a fixed price contract, there is the small print in there that if their costs go up by more than 8%, depending on which contract it is, more than 8%, they can review their prices as well. Right. So if you're redlining your borrowing in purchasing the house and land packages and then you get a cost escalation on top, you're sort of in trouble.
Well, if you play it out though, say the construction usually goes for 12 months, let's just round it out. So if there's a lack of materials and that suddenly blows out to 18 months, what does that do to the net effect of you when you have to get that last drawdown payment from the bank? Is the funding going to change?
Yep.
Is there going to be a sunset clause in there that suddenly turns your world upside down or whatever it may be?
Well, I imagine the people selling these type of assets right now would say, don't worry about that, Mr. Waters, because in that much time, because the market is so hot, it's going to be worth so much more than what you paid for it anyway.
Maybe it will be, maybe it won't be, but that's a flip of the coin.
How does it work, Vic, on claiming tax deductions on vacant land if it's a house and land thing? If you sign up for a house and land package and you can't actually build a house on it, you can't deduct the land, right?
So that changed in 2 budgets ago, where you can't actually claim the interest component on vacant land anymore. So that was one of the things that was taken away by the federal government as part of the tax reform. So effectively, you're holding onto an asset that potentially would be an investment purposes, but you can't claim the interest component on it just yet.
Yeah, and this is a challenge. And I know a lot of people who've bought this stuff and they just sit there going, waiting around forever and never get anything at all. But anyway, outside of the scope of this particular podcast, we're going to another break. When we come back, we're going to talk South Australia. Back in a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Steve Waters and Victor Kumar, Right Property Group. Victor, headline here, smartpropertyinvestment.com.au. Investors flock to South Australia in hordes. I'll read this first little bit. The number of residents domiciled elsewhere in Australia buying residential properties in South Australia increased by over 300% in the first 4 months of this year. Are these investors? They must be operating in South Australia. What's going on?
It could be. It's your entry price, depending on which area in South Australia you're investing in, is relatively low. But if you come closer to the city, you're paying similar to Sydney prices, the outskirts of Sydney in that sense. So we also need to be looking at it from a data point of view, that if there is, say, just 10 buyers and it jumps up to 15 buyers, that's a 50% increase, isn't it? So we need to drill back to what the baseline data was before we can start turning cartwheels.
Adelaide's been...
It's consistent.
It's consistent, and it's also massively undersupplied in terms of its vacancy rate, down at circa 0.8. Yeah. So it's very attractive for investors to go there and reap the cash flow with I won't say a nominal entry point, because as you say, there is some expensive parts of Adelaide which match Sydney.
Yeah.
So I think it becomes more about self-perpetuation to a degree as well. And I'd also argue that a lot of those transactions would have been initiated somewhere between the latter half of last year. It's just that the numbers flowed through to the first quarter.
Yeah, and like all numbers in property, you've got to dig into them and actually work out what they mean. The story here says, leading the charge for buyers with a primary address in New South Wales, an impressive 579% increase in the number of buyers. Victoria followed by posting 336% increase. But there's a piece here, it says, as a quote by the person, however, we consider the majority of purchases are a result of net positive migrations, with professionals and returning South Australians attracted not only by value but the lifestyle and considered positive change. So a whole bunch of people internationally coming back to South Australia, and that's probably skewing the numbers.
Absolutely.
And they sound like big numbers, but if you actually look at the aggregate of transactions, it's a lot less.
Compared to.
Yeah. It's, what's your sort of attitude on a lot of the noise around property data at the moment, Vic? A lot of people sort of base all their buying decisions on data as it is right now, when it's not necessarily reflective of the market as it is.
Yes, it's not really reflective, because if you're just basing it just on data and you look at the trend, you've got to take away the COVID filter to begin with and see what the long-term trend is. But I guess data is probably changed forever now, right? Because of the changes we've had with COVID and because of the changes we have in terms of outlook for work, outlook for where we want to live, and certainly at the current time, the affordability of the finance.
Yeah, I think you're right. I think COVID has definitely, when you look at the history in years to come, you'll see this massive anomaly within the data sets, and it is because of COVID, whether we like it or not. But I think when people solely rely upon data, it's a bit like Dr. Googling yourself. You'll find whatever you're looking for. So it's more, for me anyways, it's more about, well, I want to be before the data, so I'm looking for the trends. Then that will translate into data, and then I want to overlay the ground truth component over the data so I can make sophisticated decisions rather than sight unseen data set decisions, which could be wildly inaccurate.
Yeah, and I see people are obsessed with the data and they never actually make a buying decision. So don't be one of those people, right, Steve? It's sort of connected in with that story we were talking about, greenfield type building and some of the challenges around it in terms of materials and cost increases and stuff. Story here, Steve, smartpropertyinvestment.com.au, which is interesting and we know it, but it probably needs to be spoken about a little bit more. New South Wales needs 42,000 additional homes each year. Story, New South Wales will need to build one new home for every two that currently exist over the next 40 years, according to the State Treasury, with increased supply and ACT stamp duty tipped as a way to tackle housing affordability. So they're telling us there's not enough houses as it is right now, and into the future we need twice as many as what we've got.
Yeah, look, it's very easy to buy into that, or it's very easy to just distinguish, or just say, no, I'm not going to even take that into account. I think it's a very good assumption because that's all it is. And are they taking into account that half the world might want to live here when the international borders open? And who's to say that they'll come into Sydney and not Melbourne? And Melbourne will regain its mantle as the most livable city in Australia. I think trying to make an investment decision based upon that is a little wild. Nonetheless, they're modelling out future population growth, so it's something to take into account, but not to be the be all and end all.
And it's just not building new houses. There's this whole sort of cycle about high density stuff, big developments of high rise towers and infill and all this sort of thing.
Maybe if you were to dig a little deeper, are they taking into account the Autropolis and Badgerys Creek Airport and the hundreds of billions of dollars worth of infrastructure they're putting in there? They're going to channel people there. Yeah. And they've got to make it work.
Stuff and whether they're going to channel people up to the far north. Vic on smartpropertyinvestment.com.au story here, where you can find investment opportunities in Darwin, which has been performing really well. But Darwin's been on the nose for many, many years. Thoughts on Darwin?
Look, it has been. You need to have the local presence there to absolutely nail that market, understanding that it is seasonal. It has got a lot of tourism overlay as well. And certainly by seasonal, I mean from a weather point of view, right? You get rained out one half of the year. And we are also talking a much smaller population sample there as well.
Yeah, and look, it's another story. And smartpropertyinvestment.com, check it out. We talk about all the different capital cities. WA's rental market poised for resurrection as investor lending soars, Steve. Western Australia is celebrating a significant increase in investor lending marked by the return of investor confidence and impending long-awaited resurrection of the state's rental market. What are you seeing out in Perth at the moment, mate?
Very tight market.
Yep.
Yeah, very, very tight. It's their vacancy rate is also circa 0.8% because they haven't constructed anything since literally the last boom, which is part of the narrative piece around Perth is it going to be the boom-bust scenario of yesteryear? And the way that I look at it is that in the last boom, it was more around the suction of employment and the numbers that were there, and it was a little bit the Wild West. And when they construct a mine, that's when the highest level of employment is necessary. Today, it's more about some of the mine's expansion, but it's around production. Yeah. They just haven't built. However, there are areas of, and I'm being Perth-centric and that surrounds rather than the mining towns and what have you, because I don't know enough about them to make any sort of relevant commentary around it. But for me, the Perth market initially, I'm going to call the bottom of the market was mid last year through to October. And it was the homeowner that resurrected that market immediately. Investors found it very hard to get there for physical reasons, maybe a little bit of a psychological reason as well, being the scarring tissue from last boom, but now they're starting to jump into that market. It is the most affordable city in Australia now, I believe. But it's the homeowner that's certainly pushed that market. Now the investors in it.
Famine though.
Well, traditionally it was, but that was because of the resources sector and once again the expansion or the creation of these large mines which needed necessary workforce.
Yeah.
I think people are far more measured today. I don't think you'll see the wild booms and busts of yesteryear. I think it'll be a far more measured approach. However, it does come with every other market as well, but it does come with different risks associated with it.
And I think their state budget, their COVID state budget, where it gave incentives for homeowners to build, whether you were an investor or whether you were a actual owner-occupier, you did get a grant of circa 20K. And if you're a first home buyer on top, you also got the stamp duty concession, as well as the federal grant at the time as well. So a first home buyer would save in a house and land package around the 79K mark. An investor would save 20K mark. And that's created that huge momentum of construction in that area as well.
It does have some of the best construction numbers in Australia.
Yeah. And I'll conclude with this particular story. And myself and Steve were only up there the other week working on one of the properties, put a new roof on our property there at Berkeley Vale, which was pretty cool. You go and check it out at smartpropertyinvestment.com.au. The Central Coast we're talking about, Victor, the hidden gems of the Central Coast revealed. This is a property valuer coming out saying that, surprise, surprise, the Central Coast is a hotspot for investors. Who would have thought? With growth set to continue until the end of the financial year. I reckon it's got legs in it a lot longer than that. But where to invest? This story on smartpropertyinvestment.com. They're the hidden gems, Gosford. Who would have thought? Wyoming and Copacabana. What do you reckon about Gosford?
Gosford, if you look at it, first off, we need to take the COVID filter off, right? So it did push a lot of people down anywhere that was water, right? So lifestyle, and it's really easy to commute back into Sydney CBD.
Well, not on a public holiday
Not
Monday.
No. Obviously, you found that out.
What
did
was
you?
that? Was that 50-kilometre backlash?
I didn't go anywhere, but 50 kilometres from the Central Coast down to Sydney, like traffic.
Maybe it was all the locals coming to Sydney for the weekend because they'd moved from Sydney there.
Yes. Yeah. So we've got that COVID filter happening, right? But before that, even before COVID hit, this area had good fundamentals to begin with. Yeah. And if you look back at Gosford, there's been several infrastructure stories, start and stops. There was at one point in time the talk about a casino being built there, a hotel being built there. But it's easy commute distance to the main CBD. Plus, it's got the employment nodes and the lifestyle factor in there as well. And the prices are affordable.
I think it's the Gosford one. I think you've got to break into two types of properties, attached and detached.
Yes.
I'm not particularly bullish on the apartments in and around Gosford. Like, never say never.
So a lot of them springing up and they're a bit sort of, how's your father?
And the topography of Gosford, where those units are being built, are very, very steep blocks, and we've seen quite a lot of building issues with them over the years as we've done our inspections. But I think the Central Coast for us, we only get one chance a cycle to buy in the Central Coast, and historically we always have at the beginning of each cycle.
And that's done now? You're too late if you're trying to buy
I don't think you're too late. I just think you need to forget 12 months ago prices.
Yes.
And we'd have probably bought a couple of hundred up there prior and the initial stages of COVID, and they've done up to 30% growth. Rentals up there are extremely tight. Some areas it's like 0.5% vacancy rate through there, because we are seeing that transition from Sydney siders through to the Central Coast, and maybe if you compare Geelong to Victoria, same. But one of our metrics was that it needed to be, as COVID unwound, and maybe we entered into a hybrid workforce or model workforce, we still needed to be within the commutable distance back to Metropolis. And Central Coast ticks that box.
And Central Coast, just be careful with it because it is a big area, right? As soon as you cross the Hawkesbury Bridge, essentially you're on the Central Coast and it goes all the way up to Newcastle. It is a big area.
It is.
Very big area.
That's a very good point. Yeah, that's a very good point, because if you get the right area in the Central Coast, you could actually, your employment node might be back into the Sydney metropolis, which is rail and freeway, or it actually could be Newcastle. So it's very well positioned in terms of those employment nodes.
Yeah.
I think you will continue to see that area emerge very well into a cafe culture, dare I say it, not immediately, but it will happen, and you'll start to see the transition from, potentially some of the old fishermen's cottages into some very, very nice properties indeed.
Yeah, and you get the same or similar sort of format as you see in Sydney, Victor, these little smaller CBDs on the Central Coast. So
Correct.
Tuggerah, Wyong, the sort of Terrigal area, or Erina, I'd probably call it, where you just see these little hotspots of like mini CBD sort of scenarios and reaching out to it. So
absolutely, and these changes aren't quite evident data-wise, so one needs to take a drive down to actually see those changes happening and knowing what it was before and knowing what's happening now and what's in the future in these areas.
It's quite a diverse price bracket too, because you can pay many multi-millions of dollars and you can go all the way down to circa $550, $600, and these are for freestanding houses.
Yeah.
Obviously across different suburbs. So it is diverse and it appeals to the corporate executive who wants to live by the water and has the ability to be able to afford the higher end bracket, but also the first homeowner, because what you will see happen actually on the first homeowner piece as they're priced out of Sydney, because it's the whole affordability
you
narrative.
You get a lot more
study.
of your money still on the Central
Correct.
Coast.
You're going to see them just start to ebb out, and the Central Coast and Wollongong, as an example, is going to be right in that sweet spot.
There you go. Well, we like the gong, but that's for another time, gents. Thanks for your time today. It's good to go behind the headlines. You can go and check it all out, smartpropertyinvestment.com.au. Let's get you back, Stephen, into the studio. We've got to do a property portfolio update for Smart Property Investment as well.
Sounds like a plan.
We've got to follow up from our last discussion around the Central Coast mini reno we had to do, new roof.
And news on Port Kembla for you.
Oh, really? Okay. Watch your space.
We'll be right back after this break.
Thanks, gents. It's good. Remember to check out smartpropertyinvestment.com.au. Any questions at all? Happy to get these guys back on. We can have a discussion. Editor at smartpropertyinvestment.com.au. Social media, Smart Property HQ is where you can find us. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Bluestone makes investment loans simple with competitive interest rates. Borrow up to 85% of the value of your investment property without paying lender's mortgage insurance, and no cap on existing investment portfolio size. Plus personal Bluestone support from application to settlement. So don't wait to unlock your future. Bluestone, award-winning home loan solutions. Find out more at bluestone.com.au/investors. Lending criteria, T's and C's and fees apply. Credit provided by Permanent Custodians Limited, Australian Credit Licence 390183.